Hello and welcome to another Smaulgld live stream. Today is Friday, October 12th, 2018. And tonight's topic, well, it's a bunch of topics. It's gold, silver, commitment of traders, COMEX, Shanghai Gold Exchange, US Mint numbers, and anything else you want to talk about after we get through the charts that we have. I have a bunch of charts prepared for everyone tonight. We'll spend some time going through them. Remember, facts matter, and we'll be able to show these facts on charts, and then we can discuss them and anything else that happens to come up. Now, some of you appreciate the lively discussion we have at the end of the initial monologue. So let's get right at what happened today and pretty much during the week in the precious metals and the cryptocurrencies and the economy. Let's first start with the gold price. The gold price today, well, today was a breather. We had Wednesday and Thursday, the stock markets took a big hammering. Gold started to catch fire Wednesday afternoon, followed through on Thursday, and today the stock market came back a bit. And the stock market, the Dow Jones, after falling 800 and 700 points, managed to rally back about almost 300 points. So gold did not manage to finish in the black today. Opened at 1224 and went down at about 1215. Got as high as 1224, but never really got any higher than that. And closed at 1217, down about 0.5%. Nothing to be excited about, but you would say pretty much what one might expect. Now, over on the silver side, silver did a little better, but not much. It managed to eke out a very small gain. I don't know, maybe it was 2 cents or something like that. Not much even on a percentage basis. Opened at 14.56. Although silver did manage to get a little higher, got it to 14.68. but sold off later in the day and ended up pretty much flat at 14.58, or up about 2 cents. But let's see what that means for a couple of ratios. First, let's look at the gold-silver ratio. The gold-silver ratio still in the mid-80, about 83.5 to 1. Opened at 84 to 1. One as low as 83.23 to 1 when silver had its mini spike up to about 14.60, but then silver also sold off into the close. So the gold-silver ratio is still at 83.5 to 1. Now, another ratio we've also been looking at is the Dow to gold ratio. And I'd mentioned a few nights ago that the Dow gold ratio had opened for the longest period of time in the last few years. You can see it here now on the chart. The gold Dow ratio had reached 22 to 1. It's now at 20.9 to 1 after the last few days' actions. You can see it's hard to tell. If you look at the very far right of the screen, you can see gold price moving up and the Dow Jones going down. The number, though, is the 20.9 to 1. But you can see, it's a nice, if you stay far to the right of the chart, you can see the blue line going down from over 22 to 1 down to under 21 to 1. But you can see it's gone pretty much straight line higher since 2016. And that's a result of the stock market pretty much grinding higher and then the gold moving in fits and starts. But really, since this summer, gold has headed downward and just recently made a turnaround the last few days, and you can see that bit of a spike moving higher. So we're going to keep track of the Dow Jones versus the spot gold price. Let's take a look at a few other items. Now, one of the things that I talk about is the gold, how the gold price tracks the ETF flows. Everyone likes to look at China's controlling the gold price, or the dollar yen. There's all these different correlations. The one I've always looked at since 2013 is this one. This is the gold ETF demand. And if you track the price of gold starting at 2013, even directionally starting from the beginning when they started instituting or creating these ETFs, the gold price has pretty much followed the inflows and outflows of the gold ETFs. So you can see, especially though, almost a direct correspondence. If you go to the middle of the chart, you go to 2013, and you could track that black line down. That's the price of gold, and that corresponds to your matrix on the left, which goes from 200 all the way up to 2000. You can see that black line is the price of gold, and then the amount of tons of gold is on the right side, and you can see in the chart that basically the price tracks almost to the tick since 2013 and directionally before that to the gold inflows and outflows. Now this chart doesn't quite pick up the last 2 days worth of trading, but I have it on looking at the gold inflows into GLD and a couple of others, that there has been indeed an increase in gold back into the ETFs as the price has risen the last 2 days. You're not going to see 2 days on a 14-year chart, but it'll eventually show up on this chart. That's another one that we'll keep an eye on, is how gold ETFs. Now, what's interesting is that I've shown you, I don't know if I can pull it up quickly here now, the silver, let me see if I can find it quickly. The silver ETFs don't track the price of silver in any way, shape, or form. In fact, silver ETFs over the past, I'd say 4 or 5 years have done nothing. Here it is. Nothing but increase. But the price has been done nothing but decrease. So it is quite an interesting dynamic. You can't count on looking at the silver ETF demand as having anything to do with the price. You can just see it's not even really inversely related. It just is there. You can see silver ETFs, no matter what, have just been getting bigger. Pretty much. It kind of slowed down in the last couple of years, but still, you're at over 600 million ounces. But you can see, again, the black line is the price of silver, and those solid boxes represent the various ETFs, with the largest one being SLV, which is the one that starts at the bottom. And that one's pretty much at all-time highs. It was reached its all-time peak around end of 2016. I think it was about 360 million ounces. Now it's about 344 million ounces. But you can see the two, there's no correlation whatsoever, the way there is that tight correlation with your gold ETFs. So something else just to keep in mind. Again, I present you these charts, my quick analysis. You guys can come up with different ideas on what any of this means. But I think it's very important just to show data instead of just saying this is the data and that is all you need to know. And that's what a lot of people do. They hear facts, and not only is it all you need to know, they think it stands for a certain proposition that gold is going higher, set to skyrocket, whatever. Sometimes data is just data, and I think people attach their hopes and dreams to data that sometimes is not warranted. But we'll leave that for the discussion as we move on. All right, now let's take a look also. I think we're done with the gold and silver. Let's just see what else we have on the price of gold and silver before we move over the cryptos and then back to gold and silver. When we do the commitment of traders, we're going to look at those warehouses. We're going to look at the commitment of traders. It's going to be very interesting tonight. And the Shanghai Gold Exchange is the other thing we're going to look at. Yep. Okay, let's go. Let's do the crypto prices. Now, the crypto prices are interesting because they rose today pretty significantly. For cryptos, not, but for percentage-wise, yes. And also, we noted 2 nights ago when the stock markets had crashed that cryptos were pretty much unaffected. And then while we were talking on Wednesday night, they crashed. It went down 10%. And then yesterday, the stock market went down again. And the cryptos were pretty much stabilized from their drop, and then they dropped again. And now today, interestingly enough, cryptos had been pretty much flat all day, even though the stock market went up, and then the cryptos went higher. Now, what do I take away from this? This is just speculation. My view on this has been that Wall Street is preparing to introduce cryptocurrencies to their clients through certain things that they have, like Backed, which is a Microsoft New York Stock Exchange endeavor. It's a company that's going to buy, sell physical Bitcoin, and they're going to have a trading exchange. They're going to have storage facilities. It's all going to be regulated. You've got Coinbase is headed in the same direction. You have another company called ErisX, which is run by Ameritrade. These are all coming out in the next 2 to 12 months. You're going to have eventually ETFs approved. And my suspicion has been all along that Wall Street is looking to integrate cryptocurrencies into the payment systems, into the trading platforms that they already have. And because they want the trading fees, they want the derivative fees, they want the storage fees, they want the investment banking fees to bring companies public through initial coin offerings. They really want all this. And they realize the best way to do it is just to get it all regulated. So it wouldn't be a good idea for Wall Street to try to introduce clients to cryptocurrencies when they are at all-time highs. Why would they want to do that? I think what they'd like to see is some type of correlation between Wall Street and cryptocurrencies. And you've got that the last three days, and over the last 6 weeks, you've seen cryptocurrencies essentially flat. And then my understanding or my speculation is that they don't want the cryptocurrencies to be too high so that they have to try to convince clients that they should be buying cryptocurrencies when they're high. They also they don't want cryptocurrencies to be too low and say, let's buy this discarded asset class. I think they want to have them buy when it makes sense for them to transfer some of their assets or invest new money into cryptocurrencies when the price is pretty much tracking the Wall Street prices that are on the Dow Jones, the NASDAQ, and so on. That's my thoughts. I want to get yours on that. I've been a believer for the last year that, or even longer, that the two sides that are saying that cryptos are going to destroy central banking and the other side saying cryptos are going to zero, I don't believe either of those. I believe that Wall Street and governments, to the extent they can, are going to try to co-opt and corral cryptocurrencies so they can track, trace, and profit from it. Now, people will say that's impossible. No, it's not impossible. It's impossible to do anything 100%. Clearly, there will be cryptocurrencies outside the system, won't be traded on centralized exchanges, won't be trackable and traceable. Yes. However, I think the view is if Wall Street can get 60, 70, 80, 90% of trading to happen on these centralized, institutionally backed, regulated exchanges and move people over who are already used to trading on regulated exchanges, I think they'll be able to pull that off. If they can grab a good number, a good percentage of the outstanding Bitcoin, throw them into ETFs, put them on centralized trading platforms, sure, they won't all trade there, and people will do peer-to-peer and atomic swaps and do things off-chain, but that doesn't mean that they can't corral and get a large amount. And also the ICOs that they sell, those will be completely under their auspices. They'll be completely registered with the SEC, completely regulated, completely traded on regulated exchange. That's where I think this whole thing is headed. I nothing. And again, if I see things that happen that look like it's not headed that way, I'm not going to stick to my original thoughts from a year or two ago. But right now, and I'm not even looking for confirmation bias, it's just coming up in everything I see. When you see how much money and innovation and time is being spent by Wall Street in this. Just today, Cohn, the former, I don't know what the hell he was for Trump, some economic advisor, he left a few months ago and now he's joined a blockchain startup. There's no way this thing is being made illegal. They're looking for ways to regulate it to make institutions comfortable because, as I said months ago, the bankers are looking at this like there's a lot of money in that stuff and that's what they want to get. They want to get their hands on it. All right? Know what I'm saying? Okay. Now, what else do we got? I got to give you the prices of the cryptos. Bitcoin 6,200, up about 1%. Bitcoin Cash, it crashed, but it's back up about 4% at 442. Ethereum at 196, up 3%. Litecoin, big day for Litecoin. Litecoin has been approved for trading on Gemini. That's the Winklevoss twins. Their trading platform, fully registered, or has a BIT license in New York. Eventually will be probably registered with the SEC. That's up about 6% today at 53.55. Ethereum Classic bounced back to 952 at 4.04. All right, back to the metals precious. Let's see what we got else for you in a way of charts. All right, so one of the things that I was tracking for a while and still track, I like to track now the Brinks and the JP Morgan silver vaults. Now, again, these vaults are not necessarily, Brinks clearly doesn't own all the silver in the vaults. There's three types of silver that are in the Brinks depository. One is just, you can send silver to Brinks, you can buy it from a company, have them delivered there, and they can store your silver eagles, your silver bars at Brinks. That's fine. That's not what's included on this chart. What's on this chart are what's called the COMEX eligible silver. Those are the 1,000-ounce bars. They're good delivery. They're 3 9s. And they're the type of, that's the type of silver that can be traded on COMEX and can be delivered to satisfied contracts. And those are split into two types of stocks. It's eligible stocks and registered stock. Eligible means it's in that form. It's in those size bars. You can't trade, even though it's perfectly legit, perfectly 3 9, you can't trade monster boxes of silver on the COMEX. Just can't. That's not how it works. So if it's eligible, it has to be in those bars. And then registered means you have it registered and it's registered for sales. If it's eligible, it means, like, I can buy a bar, you could buy a bar, you could put it in a Brinks, and they would list it as eligible, but you have no intention of selling it, but it's still eligible. But you could put it in there and say, look, if the price goes higher, I want to sell it, I want to deliver it, I'll register it. Well, anyway, look at Brinks. Brinks has, and these are client funds, they're client metals. I don't think Brinks has anything to do with holding any of this on their own, for their own account. These are clients stuffing the vaults with eligible silver up to 45 million ounces. That's a lot of silver. That's up from about 20 million ounces just from July 2016. And you can see their silver is split into the eligible and registered. And they actually have more of their silver they are registered. So a lot of people, a lot of clients have bought those bars, stuffed them in the vault, and they're ready to be delivered if so needs to be. But let's take a look over at JP Morgan and the nonsense story that JP Morgan has 800 million, 900 million ounces of silver, of which the only silver you can even point to that's under their control that you might even arguably say they own is this silver here, 142 million ounces of JP Morgan Chase in their depository. Silver Eagles, whatever else, any of that other stuff is all speculation, not documented whatsoever. Just total nonsense, and it's hopium. It means nothing. JP Morgan does not have, there's no way to prove they have 800 million, 900, whatever it is, ounces of silver. And anybody tries to tell me you can't prove that they don't have it, don't understand the burden of proof. It's the same thing as saying that Brett Kavanaugh didn't prove he didn't rape somebody. You have to, if you are the person who is saying that someone has done something or has something, you could speculate all you want, but the burden is not on me to say, to explain to anybody why JP Morgan doesn't have 800 million ounces. I can't point to anything, or whatever it is. I can't point to anything to show you that they have any silver other than somebody wants to speculate that they have it. That's fine. You can speculate all you want. But people are walking around and saying that it's a fact. It is not a fact. Oh, but JP Morgan is buying silver, so I am buying silver. That is all I need to know because JP Morgan is buying silver. No, they're not. You don't know that. Someone told you that. It's not true. Unless they can prove it's true, it's not true. That is all I need to know. Okay, but now this silver, get back to just this silver, focused on this silver. this is supposedly part of that big hoard. They have 142 million ounces now in there, and they had sold just about 6 million of those ounces in September. Now, as the price was declining, now as the price has risen, this vault has filled up another 3 million ounces or so, a little under 3 million ounces. None of this makes any sense if you think it's JP Morgan who owns it, and there's no indication that this even belongs to them. This could be just like Brinks. This is client silver. Maybe some of it's JP Morgan, maybe none of it is, but there's nothing to indicate that any of it is JP Morgan. But the point is, the JP Morgan vault does have 142 million ounces of silver, or so they say, in it. But the idea, if it was JP Morgan's and they were buying it to sell at some later date, well, so far they've been had. They've been buying whatever's in here has been bought on the way down since 2015. The price has been dropping between 2016 and 2018, and they were supposedly buying it. If they bought some in 2016 when the price was 20, and so they've lost money on this. There's no way JP Morgan buys physical silver. They report on a quarterly basis. They're not looking to make money here in the next 10, 15 years. Everyone who works there gets paid their bonus on an annual basis. They're not looking. Most of the people aren't even going to be there in 10 years. In any event, the idea that they're buying silver is absurd, but if they're buying it for their own account, they've been very poor traders buying it at these prices, and then in September selling it as the price went down, and now buying it as the price goes up. Makes no sense whatsoever. And again, I don't think this is JP Morgan silver anyway. And also, even if you want to entertain fantasies that JP Morgan has this silver so that the price, when it goes higher, they can sell it and make a fortune, which, okay. First of all, the idea behind JP Morgan is the people who believe that JP Morgan is a bad actor, a nefarious actor, and a manipulator of silver, and that's their job, and that they've been tasked by the U.S. government. Why would they want the price to go higher? That wouldn't make a stitch of sense. So if JP Morgan is the one that people say is behind short selling and driving the price down, why would they ever want the price to go up? I would argue, if you want to make up stories that somehow this silver belongs to them, which I don't think that it does, but if you want to make up stories, I would say that they hold this silver in order that if the price, they drive it down low enough and a lot of people start buying, that they'd be able to keep the price down because they can use this silver to flood the market and there wouldn't be a silver shortage. So you know what happens is when the price drops in silver, and we've seen it, if it gets down like in 2015 into 13, you get massive physical demand. Well, the only problem with massive physical demand, you never want to have a situation where the physical market overwhelms the paper market and people start saying, heck yeah, I'm going to buy it $10, I'll buy it $9. Well, maybe JP Morgan, which I don't think is true, is accumulating all this silver in the case where they managed to keep driving the price down, and then there's no issue with delivery because they can always serve the market with this silver hoard. I mean, if you're going to make up stories, I just made that one up too. All right, that's it on that. Now let's look at the commitment of trade. Another story that commercials are net long for the first time. Now this was an interesting one, and we've covered this a few times. I'm not going to go through the whole rigmarole again, but my view was that the commitment of traders, and the reason that the blues, you see that the commercials were long for the first time, was because they had been short for the longest time, no pun intended. And that's because if you look at the far right of the chart where the price is, the silver price had declined pretty much from June all the way into September. And then if you go down and you could see the commercials and the non-commercials, the reds and the blues, what normally happens is when the price peaks, the non-commercials are at the longest point and the commercials are at their lowest point in terms of their shorts, or the highest point of their shorts. And then as the price falls, the longs unwind their long positions so to make sure that they retain their profit, and the shorts start selling or winding down their shorts so that they can make money on collecting their short when the price is going down. So you can see what happens is the longs and the shorts start to move in opposite directions as the price fell. But at some point, the price fell for so long that eventually they had to swap positions. And you can see where the blue actually ends up going long and the reds actually end up going short. As you can see in the last 3 years, that had never happened. It actually hadn't happened for over a decade, that type of situation. But we hadn't had for a decade that type of long... We've had periods where silver has gone down, but never like in a straight line like you'd see to the far right. It just goes straight down and it's finally gone back up. And now that it's gone back up, they're readjusting their position. What is interesting was last week when we looked at this, both the commercials and the non-commercials were both short. But now what's interesting is that the commercials have indeed, net this is, have indeed gone long again. Very small number of them, just 4 of them. But we'll watch this, but I don't pay much, I pay attention to it, but I don't put much heat into it as to what's going to happen with the price. Because people make all types of predictions based on the commitment. It never happened before, historic this and historic that, and they're going to let it ride, and nothing really happens. Okay, now let's finally take a look at the Shanghai Gold Exchange. Now this is something that I follow, I've been following for months, years, literally years, I guess. All right. Shanghai Gold Exchange is a exchange that started in 2008, and they also have silver exchange, and it's primarily you buy contracts there, but primarily there's physical delivery on far more of the contracts than there are in the COMEX, and you can take delivery of the gold or silver, but generally, and it can be withdrawn from the system and so on, and then it has to be reassayed if you want to bring it back. And it has grown a lot. And you can see this is a monthly chart of how much gold is withdrawn from the Shanghai Gold Exchange. Now, this gold can't leave the country, but it can leave the exchange. And you can see basically since 2013 it's really taken off. These are the monthly numbers. It's kind of hard to tell what's going on here. But what's interesting is since 2013 there's been really no let up. There was a little bit, you can see there's little troughs where it goes down a bit, but the volume pretty much picks up. And that's hard to tell what's going on. That's just a monthly chart. Let me show you some, let me show you the annual chart. So this one is, this chart I made for you is the annual Shanghai Gold. And I get these numbers from Nick Laird. Gold charts are us. He pulls them from the Chinese website. But this chart is showing the amount of gold withdrawals on an annualized basis. So basically, it's just that chart I showed you where you take those monthly numbers and add them up and slap them into annual numbers. And you can see that basically the big jump from 2012 to 2013. And they're pulling in, there's 2,000 tons being withdrawn annually on average since 2013, maybe a little more than that. You got to keep in mind that annual global mining production is about 3,500 tons. So a lot of this is actual physical gold kilobars being moved around in traded in the Shanghai Gold Exchange. And so far this year, they're at 1,555 tons. The big peak was 2015 when they did 2,596. But let's look at what a projection would look like, how this year is doing versus other years through September. Now, here you go. That 1555 puts it at, it's 2018, it's the third best year. So, no slowing down on gold trading in China. No slowing down of gold imports into China. Gold demand is high in China. So, clearly, there's a lot of gold in China, a lot of gold production, a lot of imports. And then people try to say, China's lying about their gold. No, they're not. That's just the People's Bank of China. And the People's Bank of China doesn't hold all of the country's gold. I don't know why it's hard for people to understand. They get all excited about the Chinese are lying. And then at the same point, they want to believe that they're lying because they want to believe there's bigger numbers. And the same people that say China's lying about their gold, Sun Tzu and all this, like, they're so smart, never show your... Well, if you actually believe that China's a lying country, which I don't, then why would you ever believe that anyone would accept their yuan as a currency if you can't trust the most basic numbers? Oh, but you can't trust the United States numbers. Forget that. If you actually are fully thinking that it is an advantage, that it's Sun Tzu or some nonsense to just basically lie about your gold reserves, that somehow the world is going to accept your currency, would never happen. Because they're probably not lying about their gold reserves. They list 1,843 tons on their balance sheet because that's probably how much gold is at the People's Bank of China. There's other gold in the country. There's probably other gold at subsidiaries of the People's Bank of China, wholly owned, partially owned, sovereign wealth funds. There's plenty of gold in China. No one's denying that. Why does everyone think that it has to be at the People's Bank of China? All right, let's just take a look at just how things are up to the moment with the Shanghai Gold Exchange. In September, 188 tons withdrawn. That's pretty much the good month. I mean, it's not the best September, it's not the worst September, but pretty much in line with every September since 2013. August was 190 tons. So clearly a robust gold market in China. No two ways about it. Now, how does this compare to COMEX? People say, oh, China's arresting the gold price. All this nonsense about everything. Everything is China's doing better and the United States is doing worse. And China likes gold. That is all I need to know. Well, two things about that. First of all, the COMEX trader obviously are there not to buy gold. They're to collect gold. They're there to get exposure to price. They may pick up some gold while they're at it. But here's a chart that I made that shows the amount of gold that's delivered on the Shanghai Gold Exchange versus what's delivered on the COMEX. And you can see there's a big difference. What's interesting about this is, so let's just use 2017. Only 99 tons of gold delivered on the COMEX, but 2,000 tons delivered on the Shanghai Gold Exchange. But the Shanghai Gold Exchange trades about 10 times less gold. What does that mean? Well, 10 times less nominal value of gold in a given day, and yet they deliver 20 times as much gold. So it's interesting. The amount of trading in dollar amounts, paper contracts, dwarfs the Shanghai Gold Exchange. Even though Shanghai Gold Exchange is getting bigger and bigger, they may trade 100 tons to the COMEX is 1,500 tons, and yet they deliver far more. So it's clearly more of a physical gold exchange than the Shanghai Gold Exchange, but it doesn't control the price at this point. And again, when people think like China wants to control the price, there's no real benefit to controlling the price. See, people think that, well, China wants higher gold prices. No, they don't. If they want to accumulate gold, they could care less. They'd rather have the price be low. I think they're more interested in importing gold and not necessarily telling everybody how much they have of it. But the other thing is that people think that China is all about the gold, and it's not. China is all about the credit. China is all about the creation of GDP and jobs by lending money. It's all about hiding bad debt. Yes, they buy gold, but China's primary purpose as a country is not to buy gold and crush the dollar. You see, you get this nonsense when people pumping gold that China wakes up in the morning and everyone in China wakes up in the morning thinking, where am I going to get gold? How do I crush the dollar? That's not their primary concern. The primary concern with the Chinese leadership is to keep the wheels of the car on while they're changing tires and going 90 miles an hour. It's to continue to try to grow their economy because they know if their economy slows, they're in big trouble. They move 400 million people from the country into cities. They've given them work. They've built ghost cities. They got a lot of economic activity, and it's all debt driven. The state-owned banks are owed money to state-owned enterprises that can't pay. So they extend and pretend they loan them more money. They convert the debt into equity. They forgive the loans. They pretend that the loans are performing. All types of financial shenanigans. It's not like China is some sound money paradise where everybody saves their money and buys gold. All right, but that you can see, that's the difference between the Shanghai Gold Exchange and the COMEX. And I think that's all the charts I have for you today. Yes, that is indeed. So let's head on over to the comments and see what you guys are thinking. Funk says, hello. If a trade war goes sour, precious metals will be up. Yes. So if a trade war goes sour to the point where, let's say the United States says, okay, we're really going to hurt China and we're going to hurt ourselves, but we don't care. And they slap tariffs on consumer goods. That would create massive inflation in the United States and possibly even shortages if the prices are too high and the U.S. has no means to produce some of the goods that people get from China. That would create a situation where you have inflation, and gold generally does well in inflation. Also, yes, if the stock market is a rage of correction, look out. And we saw that Wednesday and Thursday. And we're going to track that on our gold Dow ratio as we go along. Now, if there's no change, I'm not going to make a chart every night. But if the stock market does fall, we are going to see some... we would expect to see gold first to move higher. John Batalou. Still looking for your shredded Banksy art, Lewis. Yes, I could take my 3 paintings and take one of them and shred it and get $1 million for it. Crypto Shrugged author has joined us. Yes, check out Crypto Shrugged's book. Good evening, he says. Muis. That's rhymes with Luis. Is there a logical explanation why the COMEX shorts and longs are always in such perfect mirror image of each other? Yes. I mean, that's just a natural market. There's generally, you generally you don't like to see a mismatch of longs and shorts, and they generally, because they're also, I wouldn't say an oligopoly, but because there's really 30, 40 large traders on each side, that they'll generally line up that way. It's not a perfect correspondence. The market's big enough that that's generally what happens. And that's why I said I didn't get too excited when we saw the longs go short and the shorts go long. I said that was only natural that that's what they would do over time. Generally, you don't get to that point because the price doesn't drop straight down for 4 or 5 months. There's usually some peaks and troughs where they can readjust their positions. Trace Long, the bottom falls out by next Friday. Watch yields on the 10-year Treasury greater than 3% for your game changer. Yeah, you know, that's like a marginal line. I would imagine. It depends. 10-year is almost at the same level as the 30-year. The issue is when bond prices get higher, then you have an issue with people pulling out of the stock market. They figure, I can get this, quote, guaranteed safe interest rate at 3.5, 3.6%. See, this is one of the reasons that I said back in 2015 when all the other commentators were saying the Fed could never raise rates, would never raise rates. I said, no, they want to create demand for the dollar, so they're going to raise rates. They don't want to be the most imprudent central bank when they have the world's reserve currency. They can't be as reckless as they have been. And basically what they did was they stopped QE. They raised interest rates to try to sell off a little of their balance sheet. And they convinced the rest of the world to continue or to increase their QEs and to go to zero interest rates or negative interest rates. But right now, I think they've done it too fast. And that's what Trump is yelling and screaming about, is they're being a little bit, in a sense, reckless, trying to normalize rates while the rest of the world is in this highly accommodative, ridiculous zero and negative interest rate policy. You got China has given up on deleveraging. They've increased their borrowing. They've reduced their capital reserve requirements for banks. They've decided to do more infrastructure. So they're full on credit creation. Japan hasn't stopped, and there's no stopping in sight. The ECB has decided that they're not going to raise rates until late next year. They're still winding down their queue. They've bought every corporate bond they can buy. A Bank of England finally got off zero interest rates. Japan's at negative. So I knew that the Fed had to create some distance between itself and the other central banks, but I think that gap is far, far too wide. Silver ETF demand chart makes no sense, Lewis. Well, if you hadn't seen the gold chart, you would say it does. Maybe. The silver ETF chart is showing that the prices haven't risen and people are willing to buy the ETF and store silver. I mean, that could make sense that way. Fung Tard for sale. Cryptos are garbage. Explain why they are garbage and we'll get back to you. All digital currencies can be tracked and controlled. Okay, and so can your precious metals purchases. If you're buying precious metals online, your precious metals can be tracked and controlled. I understand there is a premium or a value on not being tracked and controlled. But when you buy stocks through a broker, that's tracked and controlled. When you buy bonds, they're tracked and controlled. So you don't have, things don't lose their value because they're tracked and controlled. So cryptocurrencies aren't not valuable if you can track and control them. If you bought Tesla or Netflix or any of those ridiculous stocks, you were tracked and controlled, but you still made whatever ridiculous profits you would have made by selling those stocks. So I don't understand. Cryptos aren't garbage because they're tracked and controlled. Your bank account is tracked and controlled. Your precious metals purchases are tracked and controlled unless you're using cash and buying with cash. All right, let's see. $5 penny. What can I do with cryptos? You can spend them, or you can trade them and make money on them, or you can trade them and lose money on them, just like any other digital thing that you can. I mean, what are you going to do with a share of Netflix? Nothing. What can you do with it? Well, you can trade it in and make fiat profits and then go buy something. Hey, yes, hey, Peter, I love Saturdays. I can catch you live. Well, you're catching us live now, isn't it? Today's Friday. Well, good to have you. Money is a social mechanism. Crypto is dead. There's $200 billion worth of market cap there. I don't know how it's dead. Marco Reese, far from dead. Just the beginning. Okay, John Batilio, then prepare to be regulated. Bingo star. That's my point all along. Regulation is good for cryptocurrencies. Tracking and tracing is good for cryptocurrencies. I just mentioned people, institutional investors, have no issue with being tracked and traced when they buy mutual funds, when they buy stocks, when they buy bonds. So when you regulate that kind of stuff, they're used to that. Slap a little Bitcoin in there, some regulated ICO, they're going to buy it. Who cares that it's tracked and traced? Essentially, the only people that don't want to be tracked and traced are people who are concerned about their privacy, but that game has long been given up, or they're criminals. But there's no difference if you're trading already on a platform. If you're already using a credit card to buy gold and silver, you're already tracked and traced. I don't know what this big fascination is that somehow it's a cut against cryptocurrencies that they could be tracked and traced. Everything is tracked and traced. Saying they're the mark of the beast. No, the mark of the beast already happened when they started doing everything digitally and doing everything online, if you want to look at it that way. There's the idea that somehow cryptocurrencies are special because they're just like every other thing that's traded. It doesn't make any sense to me. Michael Reese, their ultimate goal. I don't think it is dead at all. I'm constantly struggling. Silver, gold, Litecoin, and Bitcoin. I have enough safe cash at home. Well, that's the other problem. I think a lot of us have this, like, everything has to be an alternative investment. It has to be gold, silver, or cryptos. Can't be anything else. Everything else is just worthless. And then there are people who think that cryptos are worthless. And there's some crypto people who actually think that gold and silver are worthless. So I think the problem is that people, they gravitate towards what they want to hear. If they like silver, they listen to 10 guys tell them about silver, and they just believe in silver as if it's a religion. Or gold. Or if they're crypto heads, they just listen to crypto and they just bash everything else. And then you've got stock jockeys, they don't want to hear about gold and silver. I try to present a much more balanced view. I'm not saying I like everything, but I can see the value in a lot of things. And it's not because I'm some type of omniscient person, is because I don't need to know much other than I can see that somebody is paying $6,000 for a Bitcoin. And it's moronic to say it's not worth anything or it's going to go to zero. People have been saying that since for the last 10 years when it was like $2, $50, $8. So I think if you look at things instead of from a dogmatic perspective, whatever it is, silver bug or gold bug or crypto bug or Bitcoin maximalist or whatever it is, I think you're doing yourself a disservice, and you just like to hear the same thing repeated back at you. And then it's interesting, I get people who come from some of these sites and they just throw out facts, like statements, like they mean something. They don't. They're just facts. They have to be analyzed, not in the context of, see, most people who like any of their assets, they work backwards. They start with a conclusion that cryptos are going to the moon, Lambo, gold is going to skyrocket, silver is going to skyrocket, and then they just find facts that somehow to them indicate that if you just add those facts together, that's what it means. And yet reality tells them otherwise. People that have been saying silver set to skyrocket, greatest wealth transfer, all this other nonsense about silver for the last 6 or 7 years, it's gone nowhere. It's the worst performing asset. Oh, you'll see, you'll see. No, you just keep listening to people pumping silver, and that's why you believe you'll see, because you don't look at anything else. And then you get mad if somebody tries to tell you that there's reasons why maybe silver isn't doing well. Oh, it's manipulation. Okay, well, if it's manipulation and you only want one, and that is all you need to know, then why do you buy it? If you know it's manipulated, and there's no reason for it not to be manipulated, but then somehow you also believe that JP Morgan's going to manipulate it higher because they're accumulating it, you have to start to question your sanity. None of these theories make sense if you put them together. They only make sense on their own. Because if they're manipulating silver, then you should never buy it. If they're manipulating silver, why would the company that's manipulating silver on behalf of the government accumulate it so it can go higher? Why would they want it to go higher if they wanted to keep it low? So you have to look at, why do you actually believe what you believe? And I think at some point it just comes down to, you're convinced that you're right and the rest of the world is wrong because you listen to people who convince you that they're right. And the reason they're right is they just repeat themselves every night. Hope I don't do that. I kind of do in a way, but about this particular way of looking at things, not about where anything is going to go. All right, the beginning of the end. Governments and big banks hate competition. They want total control. If they didn't want cryptos, they would not be allowing them. Absolutely. That's my point of view. This idea that they're going to... Here's what it is. Banks know, everyone knows, anyone who's successful knows, you can't have 100% of everything. But you know what? If you can get 80% of something, you can live with somebody else having a little. Especially if it's designed that you can't get 100%. So I think these cryptocurrencies, they want a piece of it. And the governments know they can never control everything. It would cost them too much to try to control cryptocurrencies, and they would lose out. They would lose out. Why? Because their big clients, the banks, the Silicon Valley companies, would be pissed off at them. Also, governments know that if they regulate something, requires more money, means that they get bigger budgets, they get to regulate it, they get fees for doing ICO registration fees, and then they can grow also and also go after bad actors. So if everything you're doing, so for example, let's look at the alcohol, very easy example. Cost the government a fortune tracking down bootleggers. And then what ended up happening? You just had corruption, and then the cops just formed alliances with the mobsters, and they ended up not being very successful in getting rid of alcohol. What they learned from that is you regulate it, you tax it, and then if people are making illegal alcohol or they're selling the alcohol, the cigarettes without the right tax, and then you also have people hired to go do that. So the government gets bigger when you regulate and enforce. So the idea of just enforcing bans is not very attractive, and it also shows off that the government could fail. And the government doesn't want to look bad. Government can't be made to look ridiculous. So that's why I think And it's not just my view, it's what's happening. If you listen to the SEC, if you listen to the CFTC chair people, they're telling you they're trying to regulate this stuff. They're not out to ban it. No one's talking about banning anything. They're talking about regulating it. And regulation isn't a bad word to institutional investors. Institutional investors can't invest in anything unless it's a regulated product. That's why I think the people that are anarcho-capitalists or believing that Bitcoin's going to take over the world and there's going to be no middleman and all that stuff, they view the regulation as something bad. And I can understand that. But for the price, it's the best thing. Because what they don't understand is, yes, if you made alcohol illegal, people would go out and they would still buy it. You made drugs illegal, they still go out and they buy it. They're willing to risk getting in trouble so they can have marijuana, cocaine, alcohol, whatever it is. People will break the law to have something that they want that is prohibited. That's how the mob makes its money. But very few people, other than a crypto fanatic, is going to say, well, I'd rather just spend Bitcoin and spend it for coffee at places that are willing to accept it, even though they're breaking the law. No company's going to break the law. If they said you can't use Bitcoin, Starbucks is going to say, well, we're going to break it anyway. And then people are going to, why? Because there's no thrill in using Bitcoin. It's not like drugs or alcohol where people actually want it. No one really wants to trade in Bitcoin other than people who are just so into Bitcoin they think it's the only way to go. But companies aren't going to break the law to use Bitcoin. But the point is, that's not where it's headed anyway. They're not trying to outlaw Bitcoin. They're trying to regulate it. Let's see. That no man might buy or sell save that he had the name of it. Yeah, this whole beast thing has nothing to do with cryptocurrencies. The concept did not originate with cryptocurrencies. If you want to believe that the last book of the Bible and what you're talking about here relates to cryptocurrencies, it doesn't. It relates to an already tracking of digital currencies that have been around for the longest period of time. Cryptocurrencies did not usher in a digital system. They are basically a reaction to the digital system. Now, let me explain why. Cryptocurrencies are decentralized. They're voluntary. You don't have to use Bitcoin. No one is forcing you to use Bitcoin. If you want to use the mark of the beast analogy, that would be where the government forces you to use a currency, can kick you off social media platforms, can kick you off PayPal, and so on. That could be considered mark of the beast, where you must use their money, must use their systems. Bitcoin is not that. Bitcoin is not the ushering in of a digital society. That society already exists, and the power to institute it already exists by legal tender laws, by by countries. Bitcoin is voluntary. It is not the forcing of you into a digital realm. That's what people just repeat it mindlessly. Mark of the beast, cryptocurrencies. No, if you want to use the mark of the beast argument. And first of all, I hear non-Christians using it. They just use it because it sounds good, I guess. I don't know. But cryptocurrencies are voluntary. They're not government mandated. The government mandation is of the legal tender that they have in their currencies. Kareem R., I love your shows. Really catch live streams that always watch after. Well, thank you. I know you like that music that Mark Battaglia creates for me at the beginning of the show. I have cryptos, metals, cash, real estate, try to diversify. Right. Flame Tongo. So no crash coming. We'll all be just fine for the next 10 years? I don't know. I have no idea. I think we're back. I think we are back. Yes, we are. Okay, sorry about that. So Flame Tongo says, no financial crash. And I said, I have no idea. I think a lot of people insist and assume there's always got to be a crash. There's always got to be a crash. And anyone thinks there's not going to be a crash is a moron. Crashes come few and far between. I'm not saying they don't happen, but everyone wants to be the guy who predicts the crash. It's kind of comical because you see people predicting crashes every few weeks, thinking that no one's going to notice that they haven't been predicting a crash for the last 10 years. Shark Air bought a Silver Eagle. They required a fingerprint tracking control, never went back to the Blue Vault. That's how crypto was sold. Yes, John, that is true. A lot of cryptology was based on that it can't be tracked and traced. And there are privacy coins. Anything can be broken, anything can be tracked and traced. You're right. But if you just push that aside, and I do think you can push it aside because people are used to being tracked and traced, and they're used to buying assets in which they're tracked and traced. First of all, there are ways that you can anonymize your cryptocurrency transactions, just as there are ways you can anonymize your financial transactions. That's why they came up with FACTA to stop it. People used to put money in Switzerland, in Cayman Islands, and all that kind of stuff. So, of course, everything could be tracked and traced. And cryptos do make it harder to track and trace. And there are certain privacy coins that make it virtually impossible unless somebody is going to devote lots of resources on it. All right. Sharky, we all gravitate to what we want to hear. That's why we are here. Well, that's true. People who gravitate here are a smaller percentage of the population. Most people, they want to hear this type of rambling, more broad view and consider more possibilities than just being fed dogma about what they want to hear. This, in a sense, is broader dogma about what you want to hear. That's a good point, Shark Air. Sounds like you lost money in Bitcoin and silver, LOL. No, that's not what it's. See, people assume that if you take a position that they don't like, that it's either because you are a shill, a disinformation agent, you're selling something, you lost something, not that you're interested in analysis. Why would you be interested in analysis? I don't know. Do you want to be a bonehead your whole life? I mean, some people think that analysis is a waste of time unless you can make money off it. And that's not there are people who are academics, there are people who are traders and care less about analysis. There's people, I would say the people that trade the silver and the gold, those big traders, I don't care about gold and silver. They don't collect coins or anything like that. Everyone has a different point of view. Okay, question was, what comes after crypto? I don't know. What I think comes is not necessarily, well, it's crypto, but I think ICOs are going to be the big thing. Regulated ICOs, SEC registered ICOs. I think that's going to be the big deal. How much have you lost in Bitcoin? It got cut off. I don't know if I have any more people here, so I hope. It's hard to tell. Well, if I can't tell if there's people here or not, I'm going to cut this short. I want to thank everyone for joining me tonight, and we do this every night around 8:30, sometimes 9 o'clock Eastern Standard Time, and also check us out on Facebook. I'm hardly there. I just repost there. But Twitter, Gab, Minds.com, Steemit, and also Smaulgld.com is the best place to be. Smaulgld.com. Thank you very much.